Welcome to Business Edge. I'm Esther Awoni. Many thanks for joining us on the show today. Today we'll discuss the government's response to soaring food prices that's here in Nigeria. After that, we'll shift our focus to Nigeria's stock market for an outlook for trading this week. And finally, we'll unpack the audit being conducted by Liberia's new president and also just get a sense of what reforms he has for the country. That's what we have on the show for you today. But before we head to our conversations, let's bring you our top business headlines from across the continent. Our top headlines now. Recent data shows that 7.1 million unmetered electricity consumers between January and September last year in Nigeria were overbilled by power distribution companies operating in the country. The Nigerian Electricity Regulatory Commission, an agency of the federal government, reports that it issued the 11 discos with various regulatory interventions for non-compliance with the order on capping of estimated billing to unmetered customers. It also discovered that the power distributors had overcharged and made 105 billion naira. Elsewhere, Ghana's Industrial and Commercial Workers Union has joined organized labor to suspend its intended strike scheduled for February the 13th this year. The decision to stop the strike came after Akufo-Addo-led government's intentions to suspend the introduction of VAT on electricity to engage the International Monetary Fund. The General Secretary of the ICU Ghana, Morgan Ayawine, said at a press briefing that they are equally suspending the planned strike and will be on red alert. He said the union believed that the government's decision to suspend the tax on electricity should be final, nothing else. Meanwhile, this Monday, February the 12th, Kenya is tapping the international bond market for the first time since 2021 to raise cash to finance a buyback of the 10-year, that's about $2 billion Eurobond, a move that has calmed investor jitters over whether the country would afford to repay the debt when it matures in June this year. The surprise issuance marks a departure from earlier expectations that the Kenyan National Treasury would finance a planned buyback used on the country's forex reserves or proceeds from loans from multilateral lenders. The Treasury adds that a buyback will be financed by the proceeds of the new Eurobond after offer whose amount was not specified. Those are our top headlines at this hour. We'll take a quick break and we'll be right back with a market update. Stay with us. A brief market recap now. After a sluggish trading week, the all-share index ended the week in negative territory. All indices finished lower except for the NGX ASEM, which appreciated by 4.63%. Last week's losses were led by sell-offs in heavyweights such as Dangote Sugar and Boa Cement, as well as some banking stocks. The market's year-to-date return now stands at 36.2%. And in company news, following the approval of GSK's application to delist its entire issued share capital from the Nigerian exchange, its entire share capital was on Monday last week delisted from the daily official list of the NGX. In the meantime, let's just take a look at some of the numbers now, starting with the all-share index. If we could just get that up on the screen. We're seeing a lackluster trading last week where the OSHA index continued to shed some weight, standing at just over 101,000 points at this time, down 2.4% for the week. Let's go over to the market capitalization, down obviously by the same percentage point. But if we could just take a look at the top losers, let's just see some of the stocks that brought the index down in the course of the week. A mixed bag, but we're seeing the likes of Eterna, Unity Bank, Mutual Benefits, Sterling Bank. So we did see primarily just see industrial heavyweights bringing, and some banking stocks bringing the OSHA index down into negative territory. So the market is open for today, open at 10 a.m. We'll bring you the numbers, and also in the course of the show, we're also going to have a market focus, looking at how investors are planning to play the week, even as we're seeing yields rising at the fixed income markets. Could they make a switch for better return on investment? Well, our analyst will join us later, will give us the answer to that question. In the meantime, we'll take a break, and we'll be right back with our first conversation. Join us again. Welcome back. Now, Nigeria's stock market remains one of the best performing stock markets in the world, with a return of over 36% since the year began. Industrial heavyweights and banks have fueled the strong performance. However, with yields rising at the fixed income market, will investors switch sides for a better return on investment? Joining me for this conversation is Mukhtar Mohammed, CEO Asher Investment. Mukhtar, thank you for joining us this morning.
Thank you, Esther, for having me.
Before going to our conversation, I just wanted to take a moment to briefly talk about that sad news that came through over the weekend of the passing of the Group Managing Director of Access Bank, one of the Tier 1 banks in the country. Just share your thoughts. I mean, what were your initial thoughts? And just, give us a sense of how the industry, how the banking sector, the markets are, processing this news.
Well, Esther, initial thoughts is this can't be true. Maybe I have to wait till Sunday to get the confirmation from Access to even believe the news, because this was a corporate giant himself, a man that you could trace his beginning. I mean, where he started from and everything, his goal, his vision. He was a visionary leader. He was a workaholic. He was a go-getter. He was a lot of positivity, and a man that was not only looking beyond the financial sector, also looking at the educational sector of Nigeria, not just looking at the educational sector to just serve the local, but looking at serving Africa and entirely the globally. Because I remember when they interviewed, they came out with a statement just last week, that your university is collecting dollars. And he said, no, the dollar is not for the Nigerian student. It's set for the foreign student. Nigerians should start earning effects from education. And he said that he will build an institution whereby foreigners will want to come in to study, and he will bring effects into the economy. That was the way this great man, Albert Igwe, normally thinks. He thinks globally. You need to look at Access Bank from a bank of just like a bank with 5 branches today, with over the bank with the largest network of branches all over Nigeria. In Africa, the expansion has been geometric in every part of Africa. Even in Wall City, that's why you know that even the president of France, or even was mourning the passing out of Albert. It's very sad, but hopefully we know. They said a vision never died, even if the visionary has gone. And so that's the confidence we have. We could see more great companies when Disneyland was commissioned. The great with Disney was dead, but today Disney is still thriving, right. And I believe strongly that that's what will happen to all the businesses there, because there was a succession plan in everything Barry was doing.
You're absolutely right. And just thinking about where Access Bank was, back in the day before they made it to the Tier 1 list, the acquisitions and that share strategy prowess, if you will, of the late Wigwe and his partners, co-founders, and where they brought that bank to today. Obviously, so definitely quite an inspiring story, and we do hope that the good Lord will comfort the family and of course the staff of Access Bank. But it's not just Access Bank who lost someone. The NGX, the Nigerian Exchange Group, the former chairman of Gumajo was also, so there's also mourning at the NGX.
Yeah, it's also a big loss to also. Remember, he was the one that midwifed the demonetization of NGS into a PLC. He was the one that unboggled NGS into a profit-making organization at what they are now. It's also a big news. It's also a big loss to the NGS and to the investment community as a whole because of what he's done, former chairman of the NGS group. And again, knowing where he comes from, he is the son of the legendary Chris Ogumbanjo. And people were expecting so much from him after he left NGS last year. But it's sad. We lost two very, very great corporate personalities.
May their gentle souls rest in peace. Let's move this conversation along. We're looking at the outlook for the banking stocks, not just banking stocks, the equities markets this week. We've seen the market rally strongly, over 36% now year to date, although we're seeing a bit of a pullback. And one, I can't help but notice the rising yields at the fixed income market. One-year paper, as you know, printing at 19%, all geared towards attracting more foreign portfolio inflows into the country. Talk to us. How would stock investors, how are they processing this, looking just across the pond to the fixed income market and thinking about their portfolio, thinking about opportunities, if you were, for higher returns?
Well, Esther, it depends on where we were before now. And what I mean about that is most of the people that are going to play the fixed income space at the moment are those that were in the equities market. And that's why you're saying what you're saying now. Most of them are moving their funds to that space for safety. When you look at the returns, 19% in commensurate with what they have made in the equity market, especially if you have bought at a very low price, knowing that by this time last year, some of these stocks were penny stock. Access Bank was almost a penny stock. UBA was selling about 6 naira, 95 kobo. Access was selling for 7 naira, 10 kobo. GTCO was at around 15, 18 naira. And Zenith also was at about that space. So you expect that some of them are taking their profits to the fixed income space. But again, like I said, depending on your strategy, some of them are still looking that there's still a lot of value in the equity market. Some of them are exiting to see what will happen. And that trigger that may tick the equity market is if the earning result begin to come in. If we've seen some of those unedited report third quarter or the unapproved, like I say, unapproved result, especially for the banks like FCMB and Fidelity, you can but expect that there could be a bumper return for investors in the equity market. So some of the investors here are still seeing those that are looking forward to having high dividend in terms of payment, and some of them,
Right. How worried are investors just looking at the broader macroeconomy? We know there is an ongoing cost of living crisis. We've been talking about food prices soaring, pockets shrinking even further because we're expecting inflation to pick up before we do see that eventual pullback later in the year. But for investors, when they look across the economy, the strength of the reforms, how the reforms are taking, if they're taking roots and making any impact whatsoever, does that make investors jittery?
Yes, Esther, definitely, because of we don't know whether these reforms are really taking root, because if you look at the World Bank report today, just trying to let us know that we are still paying subsidy in one area or the other. I am an advocate of payment of subsidy in the electricity sector. I think that touch every Nigerian. For me, that's a good subsidy. But again, when you look at removal of subsidy, they are still saying that that reforms have not fully picked up. What the market has really benefited from is the floating of the naira, and so you expect that to continue because the naira is still not enjoying that kind of stability. And when the stability comes, the market will still enjoy it because we get foreign investors coming in, and when foreign investors start coming in, the first place they want to look at is the financial market yield, getting good yields from financial instruments, and also playing the financial stocks in the equity market. So we're still positive on that space. Yeah, investors are worried definitely on the microeconomy issues. Like I always say, the stock market has a life of its own. It could move with that life, but it will need to be sustained by the economy. And that economy, as it stands now, there's a lot of drawback in the economic policy. And then if you look at the CBN seems to be helpless in trying to steady the exchange rate. Today, you're blaming the people that are schooling abroad, people that are going for medicals, treatment, and then the following day you are coming up with policy telling Nigerians to stop patronizing foreign goods without giving them an alternative. And so today you are telling the banks you can do the buy and selling. It seems to be that every week CBN comes up with one circular or the other, and that shows that they are doing trial and error. So that is not giving investors confidence, especially foreign portfolio investors and foreign direct investors. They are not having that confidence yet.
Let's wrap this up. Let's talk about the stocks that are on your radar this week. We know banks and industrials have been favorites in the last couple of weeks, but we're seeing some profit taken there. And I suppose perhaps it's investors who are holding a long-term view on the market who perhaps will continue to keep the market afloat. But for this week, what are the stocks that you're eyeing?
I think for this week, I still think the industrials will still come up. The banking stock would see, maybe today we could see a little bit of drawback. Expect that drawback to come from a stock like Access Bank, at presently losing about 172 kobo. Maybe investors are waiting to get who's the successor, especially of the holding company. So that is why I think that losses is coming there. And like I said, yes. The banking stocks are still stocks I could still look up to the conglomerate. Then again, if you are looking to play any other sector again, then you need to begin to think of the volatility of the insurance sector. But again, the penny nature of those stocks make it interesting for investors. So I'll be looking at Massive insurance in that sector, name insurance in that sector. So I think it's a stock that investors should look at. And I think also we should look at the oil and gas sector. Eternal Oil, there was a little bit of drawback last week, but I expect there will be a gradual recovery. The result was not fantastic, but knowing fully well that they are one of the pioneer marketers of Dangote refined petroleum product when it's finally hit the market anytime before the end of the first quarter. So we might just see that numbers change, and that's a stock to look at also.
Well, thank you so much, Mukhtar, for joining us and, of course, sharing your thoughts with us today. We appreciate your time on the show. That was Mukhtar Mohammed, CEO, Asher Investment. Thank you so much. We'll take a quick break, and we'll be right back with our next conversation. Join us again. Our next guest, African farmer Mogaji, he is going to help us unpack the strategy of the federal government to crash food prices in the country. Of course, we know that recently the federal government did order the release of grains from the strategic reserves. Good morning. Thank you so much for joining us today.
Good morning. Thank you for having me.
I'd just like to get your thoughts, the response by the federal government to the soaring food prices in the country. And the strategy right now is to release about more than 102,000 metric tons of various grains from the reserves. And we hear that they're also in talks with rice millers in the country to also boost rice supply. What are your thoughts in terms of how the strength of this strategy?
Well, it's not a strategy because grains are not just what we eat. Grains is a part of it. So releasing 102,000 metric tons really doesn't solve anything. And when we're talking about releasing grains, grains should be released to millers, Okay, the last one that was released got to farmers 2 bags of corn. What do they do with that? They sell it again. So that's not a sustainable strategy to begin to release grains. The grains, if they release the grains and the grains are milled into like corn meal, into like millet meal, you know, where you can make food, then it's a different ball game. But currently that strategy is not sustainable. However, it's commendable.
Well, the federal government did say through the Ministry of Agriculture that this was a short-term measure to help crash prices. And it's also been said that there might be the importation of additional commodities also in the short term to boost supply. What we've heard is, you know, in a couple of weeks. But you do make a good point there, because what happens when in the next couple of weeks when the foods or the grains that have been released, when they run out, then what do we do? So I guess the question is, what do we plan to do in that short time, that time that we're trying to buy us some time, that window? What do the federal authorities need to do to boost supply? I mean, if that's even possible.
Well, the government needs to, you know, take hard decisions. And the hard decision is that then there's going to be some rough road ahead of us. And I would say this: these decisions of releasing grains ought to have happened prior to now. If they released it earlier, that means that they are abreast with, you know, the intricacies of the agri space in Nigeria. So what needs to happen now is to come to the people and let the people know that we can't perform any magic. However, we are doing 1, 2, 3. I can tell you that the grains would be exhausted very soon. Okay? So when it's exhausted, what happens? So, you know, and also, we seem to be focused a lot on today and now and short term. Now, May, June, July. What is coming in May, June, July may come as a shock, and when it shows up, there will be nothing government can do about it. We have been warning and warning and warning. It seems that they're not paying attention. They don't have an idea of what's going to happen, especially to Southwest. What is happening to the northern part of the country is what is triggering this fire brigade approach. But what will happen to Southwest from May is something that, you know, I hope will be averted. But right now, government needs to put their hands into a lot of production now, because on the short term, if they have to import grains, that's the truth. They have to import
if I
grains.
could just come in here, I beg your pardon. Could you just help us understand when you say what's going to happen in the Southwest from May or between May and June? Could you just help us understand what you mean by that?
So I won't put the details out. We've reached out to the highest of the political senior politicians. They're not paying attention yet. But let me say this. In the South, we eat more fresh than grains. If you release the grains to the North, yes, they will eat it. Okay? It solves the problem. In the South, it is fresh. And we have to produce. And it takes a lot of technical skills to produce. And we have by February 20th to take a decision. If implementation does not start, almost every food will be scarce. From corn, tomatoes, peppers, yams, name it. Everything that is coming to the Southwest will be scarce. And at that time, after February 20th, 2024, they may not be able to do anything about it, but just to, you know, try and quench the fires. And at that time, you can't quench the fires.
Are you referring to logistics challenges in moving food?
I'm referring to the availability of what will be transported in the logistics. It will not be available. And it always is not available around that time. But this year, food normally would go up by 200% from May, June. It's already 200%. So we're looking, just to put it in perspective, we're looking at a basket of tomato, 50 kg, based on the current currency and naira and pricing, hitting 80 to 100,000 for a basket. The projections have been right in the last maybe 10, 15 years, and I hope that they are really preparing for this. But I'm not saying the team taking the right decisions. They may mean well, but the strategy is not appropriate. The foods will not be available. except they take a decision before 20th. That's a few days from now. And we've been reaching out, but they are not listening.
Right. If we're going straight to where the pain point areas, the food, northern part, the food producing northern part of the country and the food belt also. What we hear often, almost on a daily basis, is insurgency that has led to the displacement of many farmers, etc. Is that just a problem? Are there additional factors, perhaps weather, adverse weather effect impacting on food production, etc.? Help us understand. Give us a good sense of exactly what is happening.
So you see, insurgency is a component. Climate change, bad weather is a component. We may not have control over that. We have control over other things. You know, the biggest of the strategy as far as we're seeing implementation and talks, the direction is going, we're still focusing on the north that is heavily challenged with insurgency, kidnapping, name it. Every negative index is towards the north. The southern part of the country is where the focus should be now, to be able to, raise production to a higher level, to increase productivity, such that if there's a climate change, I've said this, Europe, the whole of Europe in the last 2 years have had unprecedented heat waves, and they've not been able to move foods across those countries. If we have a disease outbreak in the north this year, if we have droughts this year, the whole country will be in chaos. Right now, it's still north. Foods will need, at some point in time before 18 months, foods may need to be moved from south. When I say south, I mean almost any part in the south, but specifically southwest, to the northern part of the country. But the conversations now and the strategy, the plan we're seeing is not paying attention to the South. Now, the politicians today need to pay attention to this one thing. It's not about the president coming from Southwest. It's about Nigeria's food security, which is the security that Southwest must step in now by virtue of the challenges looming in the North. Niger State that said that the governor said food should not move out. It didn't start now. I know of an FMCG that owns 25,000 acres, and they've abandoned that land they were cultivating every year. They have abandoned it for about 5 years now. So insurgency has made North Central also fairly handicapped. The next region that can step into that gap is Southwest. But I think the politicians are trying to, balance things so that opponents will not take advantage of that. But we're looking at something that's really going to be challenging ahead if they don't take fast actions. All
right. Just on a final note, what about, business owners, not just farmers, talking about here in the Southwest? You go to supermarkets, you go to the open markets, prices of things have all gone up. But we know that we're hearing conversations such as the poultry farmers, the bakers, all experiencing a high cost of food items. Is there a point where we may see a pullback if the right strategy is put in place and we're able to see some pullback? Is that even on the horizon?
Yes. If the right strategies are implemented, it will still take about 2.5 months to feel the effects. That's the truth. However, government needs to be, embracing private sector that already have some infrastructure facilities that either is dormant, or underutilized, maybe because of the insurgency, the price hikes of input that is affecting many of them. Most importantly, government needs to engage the religious institutions now, to say, come on board, we have these facilities, would you leverage it to be able to take care of this shortage of food or potential shortage of food? Just like in time past where missionaries came to Nigeria and government played a crucial role by ensuring they had lands to give us education and to give us health. The religious institutions now, the government need to partner with them or collaborate with them to leverage to make Nigeria food secure.
Almost, thank you for your time today. Thank you so much for talking to us, giving us just a better sense and perspective on where we are in terms of where these challenges are emanating from. I've been speaking to African farmer Mogaji, team lead Agbado.ng, looking at, of course, Nigeria's food crisis. We'll take a quick break and we'll be right back with the rest of the show. Do join us again. A quick look at international headlines. The UK shares edged higher today as markets tracked the upbeat sentiment from Wall Street over the weekend, while investors braced for a data-heavy week, including domestic consumer prices that could offer clues on the monetary policy path. The blue-chip FTSE 100 gained 0.1%, while the mid-cap FTSE 250 Opens New Tab was up 0.7%. Now, markets digested the benchmark S&P 500, which opens new tab, closing above 5,000 for the first time on Friday, with boosts from mega-cap stocks, though the focus remained on the raft of economic data this week. Market participants will await comments from the Bank of England Governor Andrew Bailey later in the day, besides domestic and U.S. inflation data later this week, for any clues on when the interest rates might begin to ease. Elsewhere, new bank loans in China jumped by more than expected to an all-time high in January as the central bank moved to shore up the spluttering economy, reinforcing expectations for more stimulus in the coming months. Policymakers have pledged to roll out further measures to support the weaker-than-expected post-COVID recovery in the world's second-largest economy amid a deep property crisis and prolonged stock market rout. Chinese lenders tend to front-load loans at the beginning of the year to get higher quality customers and win market share. And at the commodities market, oil prices fell in early Asian trade today after Israel said it had concluded a series of strikes in southern Gaza, slightly easing concerns about supply from the Middle East. Brent crude futures were 29 cents or 0.4% lower at $81.90 a barrel, while the U.S. West Texas Intermediate crude futures were down 28 cents or 0.4% at $76.56 a barrel. Geopolitical risks, including the feared broadening of the Israel-Palestinian conflict across the region and potential oil supply disruption in the Middle East, pushed prices up by about 6% last week. Those are our top headlines. We'll be right back after this break with our next conversation. Join us again. Welcome back. We do apologize if we are unable to bring you the conversation on Liberia's President Joseph Boakai conducting an audit of 3 key commissions. Of course, he took office recently and is spearheading some reforms, starting with key audits of 3 of the country's key agencies, including the Central Bank of the country. We will be keeping an eye on this development in Liberia and see how the new president is getting on with reforms in the country. In the meantime, that's where we'll leave it today on Business Edge. Thank you so much for being a part of it from myself and the team. It's bye for now.